Hey guys, good morning and welcome to the Camp Financial update for July 5th. So yesterday we had an interesting day. The market was down most of the day, started to rally toward the end of the day to end up with the S&P down about 0.7%. The Dow down about 0.6%, and the Nasdaq about 0.8%. So again, a lot of this boils down to volatility in the market and a flee for safety, right? So bond yields down to 1.3%. 1.36 I think was what I saw yesterday. I haven't looked at it this morning, but as the bond yields continue to drop, that's a flight for safety. I mean, that's all that is. That's why the markets went down. People are very concerned. It looks like we're getting a lot of concern in the general public as far as their money being able to continue to make yield. And when people are running to the bonds, the stocks tend to drop. So not really much of a surprise if you're used to this, but maybe it's not. I don't know. The other side of that is why would you want to lock up your money for 10 years at 1.3%? Well, I guess realistically, banks have been paying 0.05% interest to people for going on since at least 2011, 2012. So I think people are finally just to the point that they're nervous about having their money anywhere that isn't safe and liquid. So you're going to probably see the continued flight, which is probably going to push down the markets overall for the next 6 months. I don't know if by year end, I'd say if we end up flat for the year, then that's probably going to be a pretty good year for the S&P 500. You just get your dividends and move on. So with that in mind, let's take a look. So in the pre-market, I took a look at the pre-market this morning to give you an idea what's going to happen today. It looks like the S&P is going to start off down again about 0.75%. They all three markets, or all three indexes are showing down just about the same as what they closed yesterday to continue to drop that level today. Pre-market gainers, Newmont Mining Corp, again, not a big surprise. Flight for safety means flight to gold, flight to bonds, and the gold stocks are going to perform pretty well in this, in that space. Flight, and the flight to those things also means a flight from aggressive growth stocks, right? So Netflix down 2% in the pre-market, Apple down 0.5%, Microsoft, although not really a big growth market with the exception of their new purchase of LinkedIn, but Microsoft down 0.5%, Nvidia down 0.75%. So the pre-market is pretty much hold and serve with what you would expect based on a flight for safety. So let's take a look at what happened yesterday in the indexes. So what drove the S&P 500 and what drove the Dow yesterday. I'm getting that pulled up right now. Let's see what we have. So those stocks that performed the worst yesterday in the S&P 500, we've got Danaher Company, they're a machinery company, Harley Davidson, Southwest Energy, Company, Murphy Oil, and Freeport-McMoRan. All pretty much expected. The Harley-Davidson one, obviously, they took that huge run up 2 days ago on Friday, I guess, based on the thoughts that there might be a big private equity deal coming. Ran the stock up 20%. The stock dropped back yesterday almost 11%. So I'm not sure if anything came out that it's not going to be, that it was strictly just a rumor, or what's going on there. But my guess is that's probably the case, seeing how the stock dropped 11% yesterday. So let's take a look here, see what else we've got. And we're waiting on it to load here real quick. But yeah, so like I said, it was down 11%. Then the other ones, you've got Southwest Energy was down 10.3%, Murphy Oil down 7.8%, and Freeport-McMoRan down 7.5%. The Danaher Company, that one really intrigues me from yesterday, because really in the past, since the beginning of April, it's been, I mean, not flat, but it's been a pretty slow trajectory upward. You know, it's definitely been on a trend up from about $94 a share. It's just kind of slowly, it had slowly risen to just over 100, and then yesterday the bottom fell out and dropped to 80, close to $80.40 yesterday. And I'm trying to look at what they did. Oh, so they had a spin-off. They spun off Fortive out of their company, and it's going to be separated out to a different company. So that's what drove the drop there. Probably not much of a surprise based on the value, you know, that company is trading at as well. So let's see what performed well in the S&P 500 yesterday. Real estate investment trusts, 4 of the top 5 spots, and the other one goes to Kroger. So safety, yield, all playing out again, right? Real estate investment trusts are all about yield. Extra space storage, public storage, 2 of the top 5 yesterday, along with O, which is a Realty Income Corporation. I do not know much about it, but it looks like obviously they're in the, looks like they're in the retail space. Digital Realty Trust, which is an office, they specialize in offices. And again, Kroger, you know, probably, I think, the biggest grocery store in the United States, all up between 2 and 2.8% yesterday. So that flight for yield is there. Other top performers, a lot of REITs in the top 20. Some other ones, you've got a couple utility companies. I see 3 utility companies in the top 20 yesterday in the S&P 500, as well as 3 consumer goods companies, the consumer goods staples that tend to perform well in a declining market. Those were Clorox, Campbell Soup, and Dr. Pepper Snapple. So now let's hop over to the Dow Jones, if I can get it to come up. So the Dow Jones Industrial 30 yesterday. So we have, let me take a look. We had 12 advancing, 18 declining, which would be pretty indicative of what happened in the market yesterday. And let's start with the ones that went up. So the top 5 performers in the Dow. 2 healthcare drug manufacturers, Johnson & Johnson and Pfizer. The others, 2 consumer goods companies, Procter & Gamble and Coca-Cola, paying a good dividend, and a tech company, which they're considered tech, but they're a telecom, right? Verizon. Verizon comes in 5th yesterday, and again, another one that pays a very strong yield. Looks like, I mean, from what the little bit that I've researched them, they should have no issues continuing to pay that dividend. It's a strong, stable business. Obviously, everybody's glued to their cell phones these days, so it makes sense that Verizon would perform well comparatively in a tough market. So, and also they probably have one of the lowest PE multiples of any company in the Dow at 12.85. So let's look at those that performed the worst yesterday in the S&P 500. Your banks again are getting beat up a little bit here. So JP Morgan down 2.79%, Caterpillar down 2.71%, Goldman Sachs down 2.5%, American Express down 2.5%, and DuPont down 2.2%. So financials, when there is no yield, the financials struggle, right? I mean, that's how the financials make money, is being able to lend money out at a lower rate and than what they have to, than what they can get elsewhere, right? So no surprise that the financials are struggling in a tough yield, in a flight for safety market. So I think that pretty much covers it for today, guys. If you have any questions, specific companies you'd like me to do maybe a full detailed research, send me an email, chrism@campfinancial.net. And I think what I'm going to do is maybe bring out my research on Aflac that I did back in November, and just kind of do a video for that as well, and just to talk about, show kind of how I look at different companies, or how I looked at Aflac at the time, and why I thought it would go up, and it has gone up, and but yeah, just that way it's, obviously I don't get everyone right. I've got some pretty bad trades in my past as well. So, but this is one that, like I said, once you've done a lot of research, really dug into their earnings, really dug into their annual reports, and listened to the CEO talk, you can see how their company's going to perform pretty well. So that's it for today, guys. Thanks, and take care.